Hey everyone, and welcome back to Talk Tickers, where we do these deep dives into earnings calls. And today we're going to be looking at Marsh McLennan's Q4 2024 performance.
All right, sounds good.
So let's get right into it. You ready to unpack this?
Yeah, definitely. I think Marsh McLennan just wrapped up a really monumental year, breaking records left and right.
Okay, so before we get into like the really specific numbers,
Yes.
can you kind of paint a picture of like the main highlights? Like what should we be paying attention to?
Well, first off, they closed their biggest acquisition ever. They paid $7.75 billion for McGriff.
Whoa, $7.75 billion. That's a lot of money. So, but let's rewind a little bit before we even get into like the impact of McGriff. What about their overall performance?
Yeah, their revenue for 2024 hit $24.5 billion, which is an 8% increase from the year before.
Okay.
And a good chunk of that growth, around 7%, was organic growth, meaning it came from their core business operations, not just from acquisitions.
Yeah. Okay, so they're not just buying growth, they're also earning it. That's good. But revenue is just one piece of the puzzle, right?
Yeah.
What about their bottom line? Did all those big numbers translate into profits?
Yeah, their adjusted operating income, which is their profit after you take out certain one-time costs, increased by 11% to $6.2 billion.
Okay.
And this comes after a 17% jump the year before. So they've actually been expanding their profit margins for 17 years straight.
Wow, 17 years in a row. That's really impressive. Sounds like they're doing a good job of managing the business. But okay, let's talk about that McGriff deal. That had to shake things up a little bit.
Yeah.
How's the integration going? Any signs of trouble, or is everything going smoothly?
So far it seems to be going pretty well. McGriff is like a powerhouse in the middle market, and when you have an acquisition that big, it can be a little bit bumpy in the beginning.
So you're saying there could be some growing pains?
Exactly. Marsh McLennan actually said that McGriff might cause a little bit of a decrease in their earnings at the beginning of 2025.
The price of growth.
Yeah.
But it sounds like it'll just be temporary.
Right. They're predicting that McGriff will actually start boosting profits by the end of this year, and then even more so in 2026.
Okay, so a long-term play with a lot of potential. Makes sense.
Yeah.
Okay, so let's switch gears a little bit and talk about something a little closer to home for a lot of people. Those devastating California wildfires, obviously everyone wants to know like what kind of impact those are going to have on the insurance industry.
Yeah, those were awful, and they're going to have a big financial impact. Marsh McLennan is predicting that insured losses will exceed $30 billion.
$30 billion.
Wow. So does that put these wildfires in the top 10 costliest natural disasters ever?
It does, and it's going to have a ripple effect throughout the entire insurance world, especially the reinsurance market where insurers share risk with each other. It's still early, but it's very likely to slow down the rate reductions that we saw in January.
Okay, so potential turning point for reinsurance.
Oh.
Okay, before we move on, let's talk about healthcare costs. Everyone's feeling it. What's the latest?
Global medical costs are expected to go up by 11% in 2025.
Yeah, and that would be the 5th year in a row of double-digit increases.
Ouch. That's going to be tough on a lot of people. What about here in the U.S.? Are we seeing the same thing?
Pretty much. Employee health benefits in the U.S. are expected to climb by 5.8%, which means we're looking at the 3rd year in a row of around 5% growth.
So no relief in sight when it comes to healthcare costs. And speaking of costs, you know what time it is, right?
Yeah, this is not financial advice time.
That's right, where we come up with like a crazy trade idea based on what we've seen in the earnings calls.
Exactly. Just remember, this is all hypothetical, purely for entertainment.
Right.
Don't blame us if you lose all your money.
Definitely not financial advice.
Yeah.
But with healthcare costs being so high, like we just talked about, what if we like bet on companies that help employers cut costs?
Interesting.
Like, you know what I mean?
Yeah, like telehealth platforms or prescription drug discount programs, wellness programs, anything that helps employers save money on healthcare.
Yeah.
It's risky, but with costs going up like they are, it could pay off big time.
Okay, so enough with the hypotheticals. Let's get back to Marsh McLennan's performance. We've got the overview, but I want to get into the details.
Yeah.
Where do we even begin?
Well, we could start by talking about their risk and insurance services segment. They call it RIS.
Okay.
It's like the core of their business. And in Q4, it generated $3.6 billion in revenue.
Cool.
That's an 11% increase overall, with 8% of that coming from organic growth. So they're growing their core business even without acquisitions.
11% growth in one quarter. That's pretty amazing, especially since the insurance market has been softening. You'd think that would hurt them.
It's a good sign. Now, within RIS, their insurance brokerage arm, Marsh had a really good quarter. They brought in $3.3 billion in revenue.
Okay.
That's a 15% jump from last year. And a lot of that growth, 8% to be exact, came from organic growth.
So Marsh is doing really well. Haven't they been like killing it for a while now?
Yeah, this was actually their 16th consecutive quarter with at least 6% organic growth. They're definitely leading the way in the RIS segment.
Wow, that's a serious winning streak.
Yeah.
Okay, what about Guy Carpenter? They're a big player in reinsurance. How are they doing?
Q4 is usually a slow quarter for them, but they still managed to get $201 million in revenue with 7% organic growth.
Not bad for a slow quarter. Did they keep that up for the whole year?
Yeah, actually, for the whole year, they did even better. Their revenue for 2024 was $2.4 billion. That's 8% organic growth.
Okay.
And that's their fourth year in a row with at
Wow.
least 8% organic growth.
Wow, impressive. So they're doing well even though the reinsurance market is tough.
Mhm.
All right, let's move on to Marsh McLennan's consulting segment. That's a big part of their business too. How does it compare to RIS?
Consulting brought in $2.4 billion in revenue in Q4.
Okay,
That's a 6% increase in both reported and underlying growth.
so good growth, but not as much as RIS.
True, but consulting is different. It's not as affected by changes in the market as RIS is. Now, within consulting, Mercer, their human resources consulting firm, is still growing steadily. They made $1.5 billion in revenue this quarter with a 5% increase in organic growth.
That's good. Is that normal for them?
Yeah, this was their 15th quarter in a row with at least 5% organic growth. So they're pretty consistent.
Makes sense. And with healthcare costs going up and people living longer, their expertise in health and retirement is probably in high demand.
Definitely. Now let's look at Oliver Wyman, their management consulting firm. They had a good finish to the year with $954 million in revenue in Q4 and 7% organic growth.
Not bad. Weren't they up against a really tough comparison to last year, though?
Yeah, they were. They had
Huh?
9% growth in the same period last year. So doing 7% this year is still really good.
Okay, so it sounds like all of Marsh & McLennan's businesses are doing well. Their growth is impressive. But what about their profitability? Did they actually make more money?
Let's look at the numbers. For the RIS segment, their operating income in Q4 went up by 2% to $770 million.
Okay.
But their adjusted operating income, which takes out certain things, increased by 13% to $893 million.
So they're keeping costs under control and maintaining good margins.
Right. Their adjusted operating margin for RIS was 27%.
Healthy. Okay, what about the consulting segment? Did they see a similar increase in profitability?
Their operating income in consulting was $466 million. Their adjusted operating income was $484 million.
Okay.
So a small increase. Their adjusted operating income grew by 1%, which gave them a 20.7% adjusted operating margin for the consulting segment.
Got it. Okay, so we've covered a lot about Marsh & McLennan's financial performance, but there's still more to talk about. We'll be right back to look at their key initiatives and some of the challenges and opportunities they're facing. Welcome back to Talk Tickers. So we spent the last two segments talking about Marsh & McLennan's performance in Q4 and full year 2024, but what's next for them? What does the future look like?
Well, one thing that's always hard to predict is the economy. You know, there's a lot of uncertainty right now.
Yeah, for sure. You've got geopolitical stuff going on, inflation.
Yeah.
It feels like there's always something.
Right. And that obviously affects businesses like Marsh McLennan. How do they think they'll do in this environment?
Yeah. Are they worried?
I think they're cautiously optimistic. They see opportunities for growth, but they also know that things could be tough, especially in the first quarter of 2025.
Right. And they've also mentioned some specific things they're watching, like changes in exchange rates and lower interest rates affecting their fiduciary income.
Yeah, those are definitely things to keep in mind. But Marsh McLennan has a pretty good track record. They've been around for a long time, and they've always been able to adapt to change.
That's true.
Yeah.
And their business is pretty diverse, which helps. Speaking of big changes, let's go back to that McGriff acquisition. That was a huge deal.
It was. And it's going to change the game for them, especially in the middle market.
So they're really serious about making this work.
Oh, yeah. They're focused on integrating McGriff smoothly, using their expertise and growing in that market.
Okay, so growth is definitely on their minds. They're projecting mid-single-digit underlying revenue growth for 2025. Is that realistic?
I think so. They've had really strong organic growth in the past few years, and I don't see why that would change.
And they're also expecting their margins to keep improving. They seem to be really good at managing costs.
Yeah, they're all about efficiency. They've been doing this for years, and they've got a system that works.
Okay, so it sounds like Marsh & McLennan is in a good position. They've got momentum, they've got plans, and they know what they're doing.
Yeah, they're definitely a company to watch. They're not afraid of challenges, and they're always looking for ways to improve.
All right, well, that's our deep dive into Marsh McLennan's Q4 2024 earnings call. Hopefully this was helpful.
Yeah, definitely a lot to think about.
As always, remember, this is just our take on things. Do your own research and stay informed.
Always a good idea.
And we'll be back soon with another deep dive into the world of earnings calls. See ya!